Hello, and welcome back to Financial Education. My name is always Zach Collins, and today I want to go through whether it's best to own or rent your home. Now, what do you think? In the long run, is it better for you to buy your home or to rent the property? Drop a comment below now, and you can use that as your reference throughout the video. Before we get into that, for those that don't know me, what is my background? I was a financial advisor in my past, fully licensed, fully FISA compliant, specializing in super and non-super investments. I'm not licensed anymore, but I would love to get my license back one day. I chose to leave the industry as I couldn't stand the owner of the business, and his firm was very heavy in sales. I have no interest in sales. It's not all sales, but my passion is to help people not to sell various managed funds or insurance products. These days, I work in tax and compliance. There are a few ways to look at buying versus renting. There's obviously the mental and emotional side. Never having to deal with a real estate agent or worry about being evicted has so many mental health benefits. But that's not what this video is about. Today I want to look at it from a financial perspective. Should you buy your home or rent? Let's get right into it. Let's start with the calculations around buying your own home. I'm going to use my personal investment property as an example. We bought it originally planning to live in it long term. However, due to a change of circumstances, we moved out. It's a decent size and it was a decent price and decent location. Basically, what I think will be representative of what most people will be looking at buying these days. Let's start with the first thing that people think about, which is obviously the purchase price. So we bought the property for about $500,000. When you buy a property, you don't want to buy LMI, which stands for Lender's Mortgage Insurance. Basically, if you default, the bank has insurance, being LMI, to cover the loan if, when they sell the property, they can't recoup the full loan amount. Now, don't be complacent because the insurer will come after you to get the difference off you if that happens. Basically, you don't want to be in a situation where you need to buy LMI. To get away from LMI, you need to put down a deposit of 20% minimum. So 20% on a $500,000 property is $100,000. So you need to put $100,000 in as equity, and the rest of that $400,000 could be a loan. So the costs associated with buying property include getting a solicitor or conveyancer to look over the purchase documents, and you'll also likely be paying stamp duty. Stamp duty depends on the state, depends state by state, but you're looking at somewhere between $10,000 to $20,000. Let's go with the midpoint and assume $15,000. A solicitor should cost around, say, $2,000. So in terms of cost, we're looking at upfront cost of $17,000. Let's look at the ongoing cost that you pay as an owner, but not as a tenant. Let's start with the rates. Rates in the ACT for an apartment of that value are going to cost you roughly $300 to $400 per quarter. Let's again go with the middle and assume $350 for the quarter. That's $1,400 for the year. Now, obviously the rates will go up over time. No matter what you prefer, the government isn't going to let the money stay in your pocket. Rates tend to increase higher than CPI, so for the sake of the argument, let's assume rates increase by a constant of 5% per year. By year 30, so let's do this full estimate for 30 years, because that is the length of a standard mortgage, 30 years. So at year 30, your rates will be at $5,700 per year, and over the whole 30 years, you paid about $93,000 in rates. If you want to see how I've calculated that, here's my Excel where I round those numbers. Let's add that to a running total, and now we're sitting at $110,000 of cost to own the property. Next, let's look at strata or maintenance cost. Strata is what you pay as an owner of an apartment, and is generally paid every quarter or every 6 months. If you own a house, however, you won't have the regular payments, and instead you'll need to pay the costs as and when they occur. In my experience, I have spent more money on maintenance and upkeep on a house than I have on an apartment of similar value. But everyone's different. Over the course of 30 years, you'll find that these costs will likely even themselves out, and you'll probably be paying about the same whether you own a house or you pay the regular maintenance, or you have an apartment and you pay regular strata. A standard strata payment is about $3,000 to $4,000 per year. It'll be more expensive if there's less units, and less expensive as the number of units on the block increases, and more people to spread the cost across. It will also depend on the amenities. Is there a lift, or a pool, or a gym, or underground parking, or solar, whatever? Let's again go with the midpoint and assume $3,500 per year. We'll also assume this increase by 5% each year, because with inflation, the value of your money goes down, and you'll always be paying more over time. At year 30, with rates going up 5% each year, you're now paying about $14,500 per year on strata, or maintenance, it will also cost you about $232,000 over the course of those 30 years. Again, if you want to see how I've calculated, here's my Excel way around those numbers. This brings our running total to $342,000. The biggest cost that people face when they own a house is the mortgage. We're not going to factor in the principal payments to this cost because all that is doing is paying back the loan. We are just going to consider the interest. On a $400,000 mortgage at the current going rate of around 6%, over 30 years you're spending $466,953 in interest over those 30 years. Let's round that up to $467,000 for simplicity. It's broken down into more manageable chunks because you're only paying $2,400 a month, albeit this $2,400 includes the principal repayments too. This brings our new running total to $809,500. From year 31 onwards, you no longer have the mortgage cost. That's about $30,000 you're saving each year from your ongoing expenses. And if you live frugally, it might be enough of a difference to allow you to retire once the mortgage is gone. Assuming you rent, however, this property goes for about $600 a week. It's getting harder and harder to find good rentals these days, and so depending on where you are, that's probably super cheap. Now, in this assumption, I've assumed that rent only goes up by 3% per year. In all reality, it will be higher. As we've seen over the last few years, rent has gone up by 6 to 10% per year, much higher than the assumptions. At $600 per week, that's a first year expense of $31,200. By year 30, however, that's now $73,500 per year, or about $1,400 per week. Over the course of the 30 years, in rent alone, you would have paid out $1.484,352.97 in rent. Let's round that to 1.5 mil for simplicity. If you want to see how I've calculated that, here's my Excel where I ran the numbers, and you can see I'm not just making stuff up to suit a specific narrative. So if you rented that place for 30 years, you would have paid more than double in rent over that 30 years time period than what the homeowner had to own it. This is where we get into wealth disparity. You need to have a deposit and enough of an income to service a mortgage in order to buy your home. If you don't have that up front, you're restricted to renting, and over the course of your life, you're likely to get further and further behind if you rent, for life than if you had bought a property and paid it off. Does that mean that property is a good investment? That's not what this is about. This video is all about highlighting the differences in wealth accumulation and expenses over time. The person that bought the property would struggle in the first few years and would likely be spending more each year than the person renting. However, as time goes on, those large fixed costs don't increase as fast, and so you end up being able to save, and the renter takes over the owner in terms of ongoing yearly expenses. Hopefully I've been able to help you better understand the financials around buying or renting a home. If you have any more questions, please feel free to drop a comment below and I'll answer if I can. Thank you so much for watching, and I'll see you guys in the next one.